Joby shares have gone up 216% since the lows in April of 2025. And in this video, I want to go through their business model, their moat. I want to look at their key financial highlights, what their competitors are, their headwinds that they're facing in their industry. And then I want to also go through their historical financial metrics and their recent earnings and see if this is a good opportunity for investors right now. So if you like this content, please like and subscribe, and let's get straight into it. So Joby is in the market of eVTOLs, which are electric vertical takeoff and landing aircraft. And so these aircraft can be used for many different things. They're completely battery powered, so completely electric, and they can be used for passenger transport. They can be used for deliveries, for transporting cargo. They can be used for many different things. And in this picture, you can see one of their aircraft here. It's small, compact, small aircraft, completely battery powered, has turbines and propellers to provide, lift and forward thrust. And it's really nice. It has about 100 to 150 miles of range on a battery pack. And operationally, it's closer to 100 miles in range. Theoretically, it can go to 150 miles. But operationally, in real world settings, it's probably closer to 100 miles in range. Now, they also recently developed a liquid hydrogen model that flew for 561 miles with water as the only byproduct. It stays within their environmentally safe and sound model. They used liquid hydrogen instead of just electricity to do that range, and it was much higher range than their traditional, just straight up battery pack powered electric vehicle. So there are a lot of business highlights that I want to go through that delve into their business model and their moat. TIA aircraft begins power on testing, marking final stage of certification process. So TIA stands for Type Inspection Authorization, and it's one of the final things that they need to do to finish the certification process with government regulatory agencies so that they can start producing a commercial product. Also, the White House calls for early air taxi operations across the US. A tremendous amount of testing on the ground and in the air, and they've had their first point-to-point flights completed. They've begun propeller manufacturing in Ohio, where they have a factory. And one of the things about Joby is that they're vertically integrated. So they build their own planes and build their own software and have everything in the stack vertically. They're really positioned to take advantage of anything. Instead of having to partner with a manufacturer for propellers and another manufacturer for wheels on the aircraft, they do everything in-house so that they're really taking advantage of their whole efficient stream of operations. Autonomous hybrid aircraft for defense applications begins ground testing. They're adopting NVIDIA's IGX Thor platform to supercharge their Superpilot AI and autonomy capabilities, which is really cool because they're using professional compute to enhance their AI capabilities and really get their AI dreams, the autonomous air taxi dreams, off the ground here. Now, they also acquired passenger segment of Blade, which is an air taxi service using helicopters and seaplanes. And Blade flew roughly 40,000 customers in Q3. Well, that's making revenue for them and their business, and provides them a existing immediate network of customers. And they ended the quarter with 978 million in cash and short-term investments, plus additional 576 million. Now, investors might be curious what the stages are to get approved for such an industry. And so here they have their stages. They're completed 3 stages. They're on their way to completing the 4th and 5th stage. 4th stage almost over 50% done. So their certification basis, they did it for Joby's and FFAs. The stage 2 is means of compliance, which is almost complete. The stage 3 certification plans, 100% complete, both sides, so FFA and Joby. Stage 4 is testing and analysis. So Joby has done about 77% of that, and the FAA has done about 55% of that. And we'll see that go up and up over time. Stage 5 is show and verify. And they've done a few air shows overseas and in the United States. I said that Joby is a vertically integrated company, and you can see that they're scaling manufacturing to support their operations. They've already produced 15 times more type design conforming parts than they did in 2024. So they're really ramping the production and manufacturing of their parts that they need to make a complete aircraft when they're going to go commercial and production ready. We've added more than 100 manufacturing roles in California over the past quarter to meet demand, and now we've begun production of propeller blades in our Dayton, Ohio facility. So propeller blades make up the highest part count on our aircraft, and they've also partnered with Toyota. We've been successfully able to take the modular production process we've designed in California and drop it into our facility in Ohio, validating our methodical approach to scaling manufacturing. Over time, we expect our Dayton facilities to be capable of supporting the delivery of up to 500 aircraft per year, with our Marina, California facility continuing to support early manufacturing scale. So that's huge. And right now, they're obviously making very few for testing purposes. But if they can scale up to 500 aircraft per year, eventually in the Dayton facility, they'll be really ramping up the supply and potential revenue that these aircraft produce for the company. So they're preparing for global operations, including the Ryder Cup fans, who are able to replace 2.5-hour drives with 12-minute flights, laying the groundwork for future Joby operations at scale. Their autonomous feature, just 3 months after they announced they're partnering with L3 Harris, develop an autonomous gas turbine variant of our aircraft for defense purposes, they successfully started ground testing that aircraft. And that really puts them in a place to capture some of the $9 billion in the fiscal 2026 defense budget. You can really see that they've had a lot of business operational improvements and progress towards these all-electric aircraft ready and production ready and consumer ready. This Joby acquisition, passenger division of Blade, is really important for Joby. It basically allows them to unlock immediate market access and infrastructure in key urban markets, including New York City. And these places are highly congested, so it really makes sense for them to use electric vehicle transport, short-term, short-range electric vehicles, to avoid the congestion of the ground. They're expected to accelerate readiness for launch for customer operations in Dubai next year and subsequent global rollout. Establish the Blade brand, delivering world-class customer service. So they're getting this existing network of customers to use basically when they roll out their electric vehicles. So they have the base already there, the initial base, customer base already there. And that's so important for a company like this to have, because then they don't have to spend hundreds of millions and maybe even billions of dollars on marketing over time to build up that customer base. They'll start with the customer base and then build up from there. So that'll bring them immediate revenues. And if they can become operationally efficient, that will bring them actually positive earnings going forward. They are going to leverage proven service and operation tools, as well as expertise to advance development of Joby's Elevate OS platform, and then expand Joby's business by becoming Blade's preferred partner for short-range organ transport. Blade's passenger service has 12 terminals ideally located in key urban markets, which is where this service would really shine, is in congested areas where driving ground transport is much longer than air travel. And so they did more than 50,000 passengers in 2024, and last 12-month revenue as of the first quarter of 2025 was $105 million. Blade's network of strategic infrastructure and existing customer base is expected to accelerate Joby's global commercial rollout. So here you can see France, EU, India, and New York. So they have valuable access to limited existing infrastructure in competitive markets. They're going to combine this Elevate OS, Blade's operational experience, so customer-facing booking, just like the Uber app, they'll be able to call a aircraft from your phone, but it's really elevating their user experience and customer experience. Now, there are some headwinds to this company. Main competition comes from Archer Aviation, and they also have been progressing and developing some of their technologies. So Archer Aviation is building an air taxi network in Miami, and that's one of the congested areas that Joby could be taken advantage of. Also, another headwind is that Congress has recently tightened aviation safety rules after some accidents involving other aerial vehicles. So this does not reflect on Joby's performance, but since there are other accidents in that space, then they've tightened the whole network down. So that is a headwind, and Joby will have to work around some of the things that Congress is tightening. And then finally, there's been some recent insider sells that raise concerns among investors. So it's never a great sign to see insiders selling the shares that you're buying. But sometimes that could be from, scheduled sells for insiders. They have a plan that they stick to for selling. Investors want to see confidence from the insiders. But given that, narrative still remains largely optimistic due to significant advancements towards the FAA certification. Joby has been going up, and you can see that in the stock price. Total revenues, they really haven't made any money in the past until the most recent quarter at 22.6 million. That's probably coming from their, acquisition of Blade. Of that revenue, cost of sales was 10.1, gross profit was only 12.5, and that leads to a gross profit margin of 55.4%, which is really good. Then SG&A came in at 45 million. Research and development expenses have been going up over time, 149.2 million. And for companies like this, you're going to have really high research and development expenses. They have to research and develop the planes, make sure that they're FAA compliant, and they actually are functioning and operating successfully and safely. Operating profit, therefore, is negative $181.7 million. Obviously, you're going to have a negative operating margin. So this is what's happening right now. We'll have to look at these numbers again to see if those have improved, if they're making money, how efficient have their operations become after they scale their manufacturing. Since they're vertically integrated, they don't really have to have inefficiencies dealing with other companies, so just build on their own. Looking at their total shares outstanding, you can see that it's been going up over time, quarter after quarter. And so you're seeing a lot of dilution here too. And some of the things about their Joby acquisition, it was paid for through stock. So transaction valued up to 125 million, expected to be paid in Joby common stock. So this is why you're seeing, part of the reason why you're seeing such high dilution in their total shares, because they're paid for the acquisition shares. And that's not great to see. You would like to see theirs coming down. Kind of not realistic in this scenario where they're not even profitable yet. You're going to see that they're diluting for spend on research and development, to spend on acquisitions, M&A. And in the long term, this is probably a good decision to acquire Blade and get that existing strong customer base that they can transition in for their electric aircraft. But in the short term, as investors, this is not great to see. You don't want to see this type of dilution. Looking at their balance sheet, cash and cash equivalents at $208.4 million. And total cash and cash equivalents, like I mentioned, is $978.1 million. So let's look at their liabilities and total assets. They have $1.366 billion in total assets and $469.9 million. That's good. That's really good for a almost startup, non-profitable company, that they're still having more total assets than total liabilities. That indicates that they'll still be able to operate even during this cash burn that they're currently in the midst of. Looking at their cash flow statement, net income was negative 401.2 million for the most recent quarter, and that's been going up over time over the past few quarters. Depreciation pretty much steady at around 10 million. Share-based compensation has been going up relatively for the past few quarters, which is not great to see. Don't really want to see that. Capital expenditures around 14 million. So all in all, this is kind of hard to look at because they're not profitable yet. So none of these metrics really make sense. They need to start producing the commercial aircraft and have that produced and making money. And then we can take another look at their financial history, see what direction everything is going in. But so far, revenue is going in the right direction. Everything else is not really going in the right direction. So based on this historical financial information, as well as the most recent earnings report, there's not really a point to doing a valuation on this company. DCF valuation won't make any sense. There's no positive free cash flow to look at. In this case, I'm not going to do a DCF valuation. We can go straight into what I'm going to do with this company. Joby has a lot of potential as an investment. And right now, it's not profitable. It's not making any positive free cash flows. So as a long-term value investor, I'm going to avoid this stock for now. But I'll keep an eye on this and keep it on my watch list to see what happens once they are fully approved by the FAA to, commercially use their electric aircraft, and see where their business goes with these partnerships with Uber, with Toyota. I want to see how their financial metrics change in relation to all of these partnerships and business progress that they make. So in a few quarters, I might check back in and see how profitable or not profitable they are, and then take another look at the valuation if I can, and get an actual intrinsic value for this. For right now, I'm going to stay out of this name, but it does have a lot of potential. And that's it, guys. This has been an analysis of Joby Aviation. And if you like this content, please like and subscribe, and I will see you guys in the next one.